If you are an estate agent, letting agent, or someone who's interested in the property market, then this, the UK property market stat show, is for you. We're on week 33 of 2023, and today I'm joined by Verona Frankish, who's the boss lady CEO of Yopa, who I believe is it the 7th or 8th largest estate agency brand in the UK?
We were 6th last month, so we're creeping up.
Excellent, well done. We'll come to you in a second, Verona. The purpose of this show is to look at what's happening in the property market right here, right now. The vast majority of properties market stats look at the bottom end of the funnel. So the land registry is dealing with sales that are 9 months ago. The Halifax and nationwide indexes are looking at sales that were agreed 6 months ago. We're looking at the sales that were agreed right here, right now. Therefore, we can foretell what's going to happen to the Halifax price index and all the other indexes many, many months in advance. And that is why this show is here, to help estate agents, letting agents, or anyone who's interested in the property market know the direction of the property market months in advance. Today, I'm joined by Verona Frankish. As I said, he's the boss lady of Yopa. Verona, thanks for joining us. This is your first time on the show. Probably you could just spend, that's lovely. Could you just spend 30 seconds just introducing yourself to the boys and girls out there in property land?
Sure. So I've been in or around property for about 20 years, Chris, more recently in the last 5 years, working within the property sector, but previous to that as a supplier through my time in financial services and mortgages, working alongside agents. And I've been at Yopa for about 18 months now. So I'm a self-professed data geek also. I love my stats. So I've been an avid watcher of the show from the first episodes in January when Lee Wainwright was your guest, who was my boss previously. So yeah, it's a great show, and I hope it's definitely brought us value throughout the year. So hope we can continue to do that.
Lovely. Well, it's a pleasure to have you on. And should we dive into the stats right now?
Sure.
So we're kicking off with listings. So I'll just whiz through these and then you can give your opinion. So in terms of listings this week, we have listed 31,657. Last week, we listed 37. That's listings for those that don't know, our number of new properties coming on the market. Why is that important? Because if this number is too low, we have very much a seller's market. If we have this number too high, then we've got a buyer's market and prices drop. So it's important that you keep an eye on this one as a bellwether of what's happening in the property market. So as I said, the number of properties on the market this week, 31,000. Last week, 31,700. Week before, 31,700. Week before, 32. We're having a look at this is week 33 compared to the other week 33s. And obviously, the one that sticks out there is 2020. Again, Verona, I'm sure we'll come to that in the chat. The average price of a property coming onto the market is 394,900. Last week, it was 408. The week before that, it was 412, 416. And should we go back to June, it was 450, 442. We've got a new graph coming up to show you on that one, Verona. But that looks like that trend is on a downward level. So that will be interesting to have a chat about. Year to date, number of listings, we've just smashed through the million mark about a couple of weeks ago. And if we look at what I think is the most important graph on listings, because we've said in this show that when it comes to listings, we can't really compare ourselves to the COVID years. Those were exceptional years. That is the week on week compared to 17, 18 and 19. And to me, Verona, let's come to you now. That almost looks identical in terms of the spring being pretty level. Then we have the ups and downs roller coaster of the Easter bank holidays, and then we're leveling out and drifting off. As you can see there, we've got that little dip there, which I believe is Easter bank holiday. So we probably will have the Easter bank holiday there. What's your thoughts on this one? Fire away on the listings.
Yeah, I mean, as I mentioned, I've been watching this show since January and ad hoc throughout the year. And what's been really interesting, and also clearly we see it in our own data, is that listings have been really robust and really resilient throughout this year. And if we'd predicted where listings are this year at the end of August, if we'd predicted that in January, I think we'd all been incredibly happy with that result. The sales rate obviously will come to, which is slightly different, but from a listings point of view, there's a number of things I suppose I'd call out on this particular section. So you're right, Chris, it is pretty identical to sort of 2017 to 2019 in terms of the shape of the year. And what's interesting is that the seasonality across the summer months, so June and July, well, July and August really, I suppose, are much more in line with pre-COVID years. If we overlaid now 2020, 2021 and 2022, you would see a much different shape across a number of months, but particularly in the summer months, we definitely saw more of a bounce during and after COVID. In the summer months where people were holidaying less, I guess, they were also investing more in their properties, as we saw in our market, and we're choosing to live in different places than they had prior to the pandemic. So that was having an impact on our summer seasonality. But we've definitely seen from the data that that's returned to a more, I guess, normal seasonal shape. The second call out.
Just to give you some thoughts on this one, I've just looked back, and in 2020, the average number of listings in the summer months of July, August, and September were 45,300, which would take it up. This would be up where the 18 and 17 is. So again, it just shows you, I think you've got to, I don't know if you saw that when you under your tenure at Yopa, but everyone put more houses on the market. The issue was everything was selling.
Yeah,
estate agents need to realise that the saleability rate has gone down.
Yeah, and there's a number of factors for that. Clearly, demand has dropped, affordability has dropped, mortgage interest rates are clearly having an impact on that. I guess the second call out that I wanted to mention was the average listing price. Again, in the very early episodes of this series at the start of the year, the call out on average listing price that was coming to market, even in sort of late January, February, was still pretty high. It was well above the 400 mark.
Well, here's the graph now, which I was going to save this till later. Okay, but the blue line is the average listing price. Okay, yes. And you can quite clearly see that since the summer, it has dropped from an average of 450 to the current level of just under 400. Now, I must stress to you, ladies and gentlemen, that doesn't mean house prices have dropped 10%. It means the average price of a property coming onto the market has dropped by 10%. And that's because lower price properties are coming on the market, or not so many higher price properties.
Or the volume of both, the blend of the two are pulling together to give a more realistic. I was really encouraged to see that starting to reduce, to be honest, because I think you're absolutely right. It's not necessarily just about the reduction in house prices, because there will be an element of reduction in house prices, but it's more a combination of that. The volume of higher price bracket properties is reducing, and the volume of lower to mid price properties is increasing, and that blend is getting to a more realistic average listing price, which I think is a positive thing. But I also think, and this will come on to price changes, I'm sure, but I think agents are having much more honest conversations, and also sellers are a lot more responsive now, halfway through this year, to honest conversations than perhaps they were at the start of the year. Our feedback was that customers were still believing that we were in the market of 2021 and 2022 in the early part of this year. But I think there's a lot of press, and whilst we are not always grateful for the narrative in the media, I think sometimes it does help us in order to have those conversations where customers are seeing it in the news, they're seeing it in their social media, and then when we have an honest conversation with them, they get it much more readily now than perhaps they did in the first quarter of this year.
Indeed. We'll come back and look at the yellow and red lines when we get to price reductions. In fact, we're now going to go to price reductions. In terms of the number of price reductions this week, we're at 20,500. Last week we were at 22,900 the week before, 21 the week before that, and 23 for the week before that. We're running presently at approximately 16% of properties per month are being reduced in price. Now, I know that's all dependent on whether it was correctly priced or not. Do you think that's enough?
Okay, so I think there's a couple of responses to that one. I think that 16% will definitely mask a sort of a national average will mask regional variances and nuances. So there would be some parts of the country where those price changes will be higher than that 14 and 15%, and some places where it'll be lower. And that's right, by the way, because regionally the picture is going to be very different. I think the initial conversation and the initial listing price is probably way more important than we give it credit for. And I think there probably still is customers, despite what I said previously, that are more receptive to an honest to have an honest conversation, to demonstrate their expertise at a local level, to demonstrate where they have the importance of pricing it properly in order to get optimal and greater chance of selling than if you overprice it or price it in line with the consumer's expectation. And then even a few days or a couple of weeks later, even to reduce that price, you reduce your chance of selling that property. So the message from us will always be to price it as accurately as you believe to be appropriate for the market today, and then review very quickly with your consumers, because you're going to know, even in this market, you're going to know in the very early days what kind of interest it gets in your locale, and that will give you a very good indication pretty early on as to whether you priced it well enough or not.
Interesting, you talked about regional variations, and we've got this magic graph which looks at price changes as a percentage of listings. And you can see here that in the northeast, around 50% on average for every in terms of listings. Here we go. So on average in the northeast, here we go. We've got an average 51% of price changes as a percentage of listings. Okay, so for every every two listings, you're reducing one of your others. Whilst in outer London, it's in the 70s and 80s. So therefore, you're absolutely right. Further south, for every 10 houses that you're putting on the market, you are reducing 7 or 8 of your existing stock in terms of percentage of listings, whilst up north is 50 or 60%, and in Scotland only 34%. So those guys obviously realistically price their properties. Shall we go on?
Sorry, just on that point, I think there's a slight nuance in Scotland on the basis of the home reports, so they have a slightly different system, so that drives a more accurate pricing. I think just the point that I was making previously about the correct listing price is even more exacerbated by what you've just described, because if we are repricing 7 out of 10 properties that we're listing, that has got to beg the question: are we getting it right in the first instance? So I think, if that is the case in your agency, then I would seriously consider whether we are having an honest enough conversation in the lounge as to the listing price in the first instance.
Bang on. Right, let's move on to sale agreeds, and we first look at gross sales. So this is just top line property sold subject to contract, and this week we have sold 20,000. No, yeah, that's right, 20,382 properties. Okay. With an average asking price of sale agreed of 351. There we go. So that's our number. So we've listed 20,382, which again, this is where we're going to look at this in a graph format in a second. We are slightly off. I mean, ignore 20, 21, and 22 because they were unique markets, but we are slightly off the pace on 17, 18. So we're on the pace on listings compared to 17, 18 or 19, but we are slightly off the pace with regard to sale agreeds, which again, I think at the start of the year with all the economic doom and gloom, I think we'd have all taken I mean, we're coming on to that in a second, but net sales were about 8 or 9% off where we were in 17, 18 and 19. Now, the average asking price of a property being sold is 351. Last week it was 351. The week before was 351. The week before that, 353. The week before that, 355. Year to date, gross sales just under 730,000. And there is the month, the week by week. And again, we're comparing it with 17, 18 and 19. What's your thoughts on this, Verona?
Yeah, I mean, I think you're right. We would have taken this at the early part of the year, but we didn't predict the level of listings that we were going to maintain throughout the year. So there's definitely two factors that are impacting the sale agreed rate. One is the length of time that it's taken now to sell a property versus the last few years, which were, you were listing and selling within a matter of days in a lot of cases, and in a matter of weeks. That period of time has significantly extended, and also the sale agreed rate, the rate of sale has also reduced. So both of those are compounding to mean that the delta between listings and sales is now much greater than the previous years. So that, I think that's where the disappointment and the gap is really. And there's a number of things that are the consequences of that will be, if you're listing properties in month one, you're not selling it for another couple of months or up to 3 months, and then it takes the time to complete, then the cost of that, and also not only our sales rate is declining, but fall throughs, and we'll come on to talk about those, all compounding, meaning that your revenue recognition from the number of listings, so we're still listing at the same quantity or high quantities, we're putting the effort into selling those properties, and then the end result is becoming much more challenged, as well as the cost of doing business in that period of time has also increased since 2017, 18 and 19. So I think there's a number of agents that are going to find that a real challenge. And particularly as we go through the rest of this year into the quieter periods, I think that's going to be a tough quarter for a lot of agents.
Indeed. Right, let's now go on and look at fall throughs. So the number of fall throughs this week on sale agreed was 5,913. Now, that does sound an awful lot, doesn't it?
Mm-hmm.
But I think it's important to remember this. Okay, let me just pull this up. Hold on. There we go. Hold on. Pull it up now. 2 seconds. Should be able to see sales pipeline.
No, we're still seeing sale fall throughs.
Hold on. Can you see it now?
Yes.
Yeah.
Yes.
Okay. So, all right. So, okay. This is a few weeks out of date because this was the back end. This was the 31st of July. But I think it's important to remember that as we went into on the 1st of August, there were 427,756 sales in estate agents' pipelines as we went in on the 1st, of which 5,913 fell through. So that is less than 1%. Yeah, and I think we need to remember that. That we don't have a panic, that we remember that, and we take everything.
I think the challenge, though, is given everything that I've just said about the length of time, the cost increasing, we're listing lots more, but we're not selling, and we're not turning our pipeline as quickly as we were previously. That's every single fall through hurts, and should hurt, by the way. Every single fall through should hurt. So I think, as agents, what we have to do is we have to work really hard, and much harder probably than ever before, at protecting that pipeline and making sure that once we've sold it, that it does go through to completion. And that's not just about our business, by the way. That's about, doing the right thing for our customer and to secure the property that that the buyer has committed to, and make sure that we get we fulfill the needs of our clients. So yeah, it does hurt, but you're right. In context, we have to always take this in context. I suppose the other question is the fall through rate as a percentage of our sales rate. Because from the last time I looked, I think when I looked at the graphs earlier, that has increased slightly. So that potentially is a risk.
Yeah, I mean, I think it's important. I mean, as you look here, the sale fall through rate is the number of fall throughs as a number divided by the number of sales that you have made that week. Now, normally, as everyone knows, the number of properties that if a sale falls through, it's very unlikely for the ones that were agreed this week to fall through so quickly. You wouldn't have instructed solicitors, but it is a measurement that we need, that I think is an important measurement as a week by week measure. And as I said, this week we are on 29.01%, and the number of sale fall throughs, as we said, was 5,913.
Yeah.
Now, what is particularly interesting is there are products out there that estate agents can have. I mean, again, reservation agreements will take, and again, there are a number of good suppliers out there. Do check them out, but will get your sale fall through rate into single digits. And
yeah, I heard you talk about a case study previously, actually, Chris, and I think you mentioned a customer who was using Gazelle, who's one of the providers, and his fall through rate had gone from 30% down to 6% or something, which was phenomenal. But you're absolutely right. You know that is one of the tools available to us, and there are other options like auctions, committed buyers, things like that as well. Because and that's the key really in having the honest conversation with your customer and really understanding what their motivation and their needs are. And is time a key factor for them? Is that the priority? Is value, so realizing the value in the property, is that the priority? And we therefore have to price accordingly, and we therefore have to build and agree a marketing strategy with those customers to make sure that we are fulfilling what their motivation and their priorities are.
And I can't disagree with you, absolutely spot on. And again, if you actually read the law of the 1979 Estate Agents Act, you have a legal obligation to inform homeowners of the different sale methods there are. A modern method is an exceptional one. Interestingly, someone asked me what percentage of sales in the UK use the modern method. 1.4%. So that's quite low.
Yeah. It's an interesting one. It is quite low, and actually, it's a driver. It's something that we're really sort of building on, and it historically has been quite low for us. And I think sadly there is still an element of a taboo around some of those modern methods of sale. That's not easy to say, and that's sad because it really it means that we're not explaining it in a way and understanding our customers' needs, and then explaining the options available to them in a way that we feel confident about, because if we don't feel confident about it, then we're definitely not going to portray that to the customer. So yeah, I think you're right. There's definitely more tactics and strategies that we could deploy away from the more traditional methods that perhaps we lean to.
And do you know what else I'm a big fan of? Outsourcing your sales progression.
Okay, yeah. I think, depending on your model, depending on your business, and depending on your setup, absolutely. I don't think there's any right or wrong answer to that one, and I think it will work. It's a bit like, in some ways, outsourcing property management and lettings, and outsourcing different elements of your business. Whatever works for different models.
I mean, I've talked to a number of outsourcers. I'm not going to mention names because we're not allowed to promote on this, but the average sale at the moment is taking 19 weeks. You talk to all the big outsourcing, and their fall through rates are a lot lower, but also their times 12 weeks.
Yeah.
So you're getting paid on more properties and having less and quicker. It's absolute no brainer. And again, I think we're all guilty that there's plenty of one man, one woman bands out there where sales chasing is something that kind of gets left.
Yeah.
If you can have someone who's absolutely exceptional at sales progression, it can actually be an advantage to you. Right, let's get back onto the stats. So fall throughs as a percentage of sales, 29.01, like we said, and the year average is 24.28, and these are the averages for week 33. And as I said, the number of fall throughs, again, a lot of people forget this, that the fall through rates were, in terms of numbers, higher than they are today in the glory years. So we often forget about that.
They were masked because of the volumes, right? They were masked.
And again, I think an awful lot of people in our industry are very transactional.
Yeah, absolutely.
But let's not go down that rabbit hole just yet. Okay, net sales. So with net sales, we always bring in the 2021 and 22 figures just for a little bit of piquancy, and before we plow in to the other stats. The pink line is 23. The white dots are the average of 17 to 19. If I put them all on, you won't be able to see anything. And you can quite clearly see here that 2020 took off like a rocket ship, and she's now starting to come down. Whilst 21 was a normal start, and then we had the ups and downs, and then she leveled off in the spring. So again, apart from 2020, they're all going in roughly the same direction. The tail off of the number of properties sale agreed.
Yeah, I think the question, and I'll be interested in your viewpoint on this, Chris, because I know you love your stats, and what's going to be interesting, I think, is what goes beyond the summer months, and what do we think the rest of this year would look like? Because the trend here, if you read this trend line, this trend is going downwards. And if we think that that's going to be the case, that our net sales are going to continue to fall as a consequence of the things we mentioned earlier. So the length of time it's taken to sell, and also our sales rate and our fall throughs. What does that look like for the rest of this year? Do you have a view on where we're going to end up in total transaction volumes this year?
I put my marker down 8 weeks ago and said that we would finish on 885,000 transactions by the end of the year. But that number, because remember, the land registry will announce that in early March, but it won't be topped up, because again, it does take a while for sales to come through. So that number will be actually almost put into stone by late spring, early summer. I'm calling 885, which is 25% less transactions than last year. So in essence, estate agents are going to exchange on 25% less exchanges compared to last year.
Yeah, and our view, my view, is around about 900. So we're definitely really, really close. And I guess we talked about it right at the very start, is that the delta between listings and transactions ultimately. And our view is that we're probably going to end up somewhere between 1.25 and 1.3 million listings this year. That's a big gap, and that's a gap bigger than we've seen for some time. And for me, that's the risk. That's the risk for where we're going to end up in the rest of this year.
What is particularly interesting is that is a particular risk if those houses do not remain on the market, and we've got a lot of
stock.
I can remember the time when I actually didn't have grey hair, and wasn't a chubby lad either, because I like that beer in my food. But you would have 300 houses on the books, and you would be selling 30 a month. These are and I think it's important that general stock levels are seen. I tell you what, you just let me just see if I can find general stock levels now. So just give me a second, and I will try and find those for you. So just fill for me for a second, will you? While I think
the stock one is an interesting one, because this time last year, I think across the board on average we were probably on about 50% of stock levels last year, which clearly wasn't enough, and there was significant demand for that stock last year, which clearly did drive up the property value, but also supported by very low mortgage rates. And the return to a more normal stock level is really important, but also we have to be selling them. And the challenge we have this year is the liquidity and the affordability, because people are coming off mortgage interest rates that were artificially low and, quite frankly, not sustainable. And we're moving now into a more normal mortgage environment. Speaking about, remembering the bygone days, when I got my first mortgage, Chris, and I was 19, I mean, not many people can buy a property at 19 now, but my first mortgage interest rate was 11.5%. You know, and that's just shocking. But 4% today, 5% today seems really high in comparison to the last few years. And we've still got a lot of people, customers and agents, who have only been used to that kind of environment. And that's the challenge, is changing that viewpoint and educating people to that new normal that a lot of people will have.
Okay, right, whilst you've been doing that, thank you very much. You should be able to see a graph with lots of different turquoises and reds on. Can you see that on the screen?
It can, yes, that's the 28 data.
Good stuff. So therefore, what we can do there is we can hover over. Now, we are halfway through August at the moment, so we have to just take that with a slight pinch of salt because the figure gets leveled out. But the bottom line is this. In July 21, there was an average at anyone throughout the month of 451,000 properties for sale, 468 in July 22, and 641,000.
Yeah.
So in essence, we are 20% more. No,
Yeah.
more than that. No, a lot more than that.
More than that.
Yeah, that's nearly 30%, isn't it?
40% more.
46. Yeah.
Yeah, exactly. And again, that will be nuanced regionally and around the country. But you know, and we were short of stock last year. There's no question. We were. However,
I mean, so here we go. This is the nuances. So again, here we go. So that is London, and you can see there's not that much change.
Yep. Yep.
Okay. So let us go to the southeast and the southwest. Pretty big there. There you go.
Yeah.
Okay.
Yeah.
Let's go to the Midlands, where we'll go West Midlands and East Midlands. Well, okay, there we go. Even more. Yeah. So therefore, stock levels have hardly changed in London, but have changed massively in the Midlands. Should we go up north?
Yeah. Same. Oh, here we go. Right. So that's a little bit less, but still a significant difference.
Yes, but it looks like the Midlands are the one where there's a lot more properties come on the market. So again, I've learned something today. So that I do like. That's why we have guests on here. Interesting. Right, let's go back to the old Stataroonies. So we were talking about the percentage difference between asking price and sale agreed. Interestingly, this week it is 12%. For the last few weeks, it's been 16, 17, 18, 19, 21, and in the spring, it was as high as 24. In terms of price difference, the average asking price of a property coming on the market this year in yellow, this week, 394, whilst the average price of a sale agreed, as I've already said, 351. So that gap is narrowing. That doesn't mean that prices are going up.
Yeah,
that is good news. It just shows that the market's leveling out quite nicely.
Yeah, the market is adjusting, and I think customer expectation, as we said earlier, is adjusting. Agents are getting more confident, more comfortable in having those conversations, which is really important. And you know, just on that point, I suppose, about having that honest conversation with customers right at the outset, there is so much anecdotal and data to support the fact that if you have that honest conversation, yes, there'll be some of them won't necessarily like it, but they're paying you for your expertise. That's why they've invited you into the lounge. That's why they've chosen you to present to them what you can offer. We have to leverage that and have the confidence to have that honest conversation with customers, because that's where you'll get your credibility from. And if you listen to customers' viewpoint, for sure, understand their needs, and then list the property to suit their needs, then, but also being honest with them about what you think the market is capable of in that area for that property, then I think that will be, you know, the more we do that, the more educated our customers become.
Can't disagree with you on that one. Right. looking at the blue line, which is the average listing price, since the summer has come, the average listing price of properties coming on the market, this is not the value, this is the average asking price of a property coming on the market, has dropped by 13.6%, whilst the average asking price of properties sold has dropped by 5.9%.
Yeah.
Okay. Now, I think it's really important. People say, well, you don't actually know what they sell for. But again, I've said the number of times, Hamptons have produced a wonderful report every single month since 2006, 2007. And they use all of the countrywide data. So they've got access to 8 or 9% of the market, which is pretty damn good. And they analyze the difference between the asking price on sale agreed day, not original asking price, average asking price on sale agreed versus what she actually sold for. And this is, I think this is an important stat for the estate agents listening to this, is this: no matter what happens, okay, excluding the 2021 where things went over the asking price, okay, but for every year since 2006 up to 2019 and 23 as well, the gap between the asking price on sale agreed day and the price achieved is always between 1 and 2% below the asking price on average. Okay. Now I know there's ones that are going to be bargain of the year and ones that go over, but that's a wonderful thing when you're dealing with big numbers, what they actually sell for. And I think it's really important, that stat is that if you're an estate agent and you are going to a person's house, you can actually say that, you know, when they say, well, you don't know what it sold for. Well, yes, we do know what it sold for because Hamptons have done this research, and it's always 1 to 2%. Even when the poo was hitting the fan in 2008, it was always 1 to 2%. So bear that in mind. That's why good pricing is important. And again, we've already talked about
what is encouraging is that gap is definitely closed. You can see very clearly on that graph that the gap between the blue line and the yellow line has closed as we've gone throughout this year, which is really encouraging.
Yeah, like I said, 24% in April, May, and for the last couple of weeks, it has been hovering around the 14 or 15. What is particularly interesting is that the long-term average is 16%. So we are now below the long-term average, and it's the first time we've been below the long-term average.
Well done, estate agents. That's really good progress.
But remember, one swallow doesn't make a spring, as my nan used to say.
Yeah. But it's an indicator, right? Yeah.
Right. Okay. So we don't spend too long on these, but basically green shows that it's a positive number. Red shows that it's not such a good number. Okay. We've got the national stats, which we use this for the graphs so far, and then we've got all the regional stuff. Now, due to the nature of the YouTube, you probably won't be able to see these numbers, but we can see some form of tonality with the colors. Now, all these stats are available for use. If you go to my YouTube description of this video, if you scroll down to the bottom, there will be a link. You can download these to your heart's content and use them. You are not to use them on social media without my express permission, because some of these do get used by my own estate agency clients, because I'm a statistician and I help them produce reports. I'm happy, though, for you to use any of these graphs, not on social media, but on your valuations. And I don't mind you using them if it helps you, because if it helps you, it helps everyone. But here's some graphs here. We're not going to spend too much on time here. It looks Scotland's doing particularly well this week on listings. But again, just all tonality, very, very similar. You can see that even between, I'm flicking between the twos and and everything is, everything was green in the spring and it's now just leveling off and going to a whitish.
It's interesting. Just scanning across a number of those graphs, Chris, the price changes, the volume of price changes is increasing throughout the year. And we've seen that in the data, and the fact that we're getting closer to the right listing price. But the fall through rates across pretty much all regions has also worsened throughout the year. So that's an interesting dynamic.
Fantastic. Right. So we've got some other graphs here if you want to look at the regional stats. Gross sales as a percentage of listings. And again, see the tonality that the gross sales as a percentage of listings are really high in the north of England, but as you go up into the south, it's much lower. I mean, again, have a look in here. The average of Yorkshire in the north is 70 or 80%, whilst inner London, late 40s, and outer London and southeast in the 60s. I just find
this is gold dust. Honestly, if you're an estate agent trading in a particular part of the country, I personally love this kind of data because I think it helps you really understand your market in the context of the rest of the United Kingdom, but also it demonstrates your knowledge and your expertise in the lounge. And this doesn't mean you have to blind people with science, right? It just means that you pull out a couple of key stats to demonstrate your research that you've done, the data that you have that supports their cause, and then understanding what they want from their experience and their journey, and utilizing your knowledge to help your customers. I just think that's gold dust.
Thank you for saying. Right. Okay. So again, those are available to download for your own personal use on valuations each and every week. So next we are going to go, we've done the national stuff, Verona, we have looked at some regional stuff. We're now going to focus on a town or a city. And this week we are going to go to Bournemouth. So let's go and have a look. Okay, so we are going to go to Bournemouth. So let's go and have a look. So we're starting off with my friends Bricks and Logic. I'm a big fan of Bricks and Logic. They put lots of gorgeous data into maps and absolutely beautiful. So interestingly, we're just looking at here is what's happened to house prices in the Bournemouth area. And you can quite clearly see that house prices in Bournemouth are slightly higher year on year compared in the centre around Westcliff and Boscombe, but are obviously down in the outskirts. I don't know if you've come across this piece of kit, Bricks and Logic, not being paid for them to do it, but absolutely fantastic bit of kit.
I've not used Bricks and Logic, to be honest, so it's something I will have a look at.
Yeah, it's a bit good, and you can look at what's happened to rents, okay, and you can look at pounds per square foot, which again you would expect because that's sandbanks there, okay.
Yeah,
and you can look at gross yields. Oh, and look, you can
excellent.
zero in
Wow.
on the city. So I, again, absolutely massive fan with this, and you can compare and contrast. What looks particularly nice is if you use that, you get an account, and then you can take the graphics out, put it into some nice Canva templates. It works.
Yeah.
Great.
Yeah.
So that as I said, we're dealing with Bournemouth today, which basically got to be careful with Bournemouth because Poole is its own entity. But in essence, we are looking basically this kind of patch here, up here, around that. That's the sort of Bournemouth that we're going for. We're missing out Christchurch. We go up here through Townsend, Muscliffe, Northcombe, Edinburgh. Apologies if I'm mispronouncing this to you locals. Bearwood, Camford, Alderney, and then bring it all back through to here. So what we do with this is that we deep dive, and again, Verona, just dive in and cut across because I will just keep talking till the cows come home on this because this is my favorite. Sure. We're using the 20 EA Insights platform. This is a 20. I am a really fanboy of this. You can get this for your own agency. I've got the national one. You can get it for your own town. I believe there is a package if you only have 1 or 2 postcodes, which is free of charge. And then if you want to have slightly more, you pay them a few shekels. And again, I don't know what the prices are because I've forgotten because I'm not on any kickbacks or commissions, but it certainly seemed very reasonable to me at the time. This is Rightmove Plus on steroids with lasers and glitter balls. So we're starting off with residential sales, and then we'll move on to lettings at the end. And we're looking at the number of properties that each agent has. So again, we'll just spend a little bit of time, and it looks like Myers are number 1, and you can see that their market share of properties on the market, not new listings, we'll come on to that in a second, that appears to have been growing, which is good. Goadsby, let's just have a look at those. Pretty static. Palmer Snell, static. Burns, and a bit of a dip coming back. Winkworth's dropping. House and Son increasing. Slates, about the same. Fox and Sons, MK Estates, Rising, well done, guys.
Interesting, Chris, that that top 10 is dominated by a selection of independent agents. That's really interesting and quite unusual in quite a big town like Bournemouth. So
Yes.
yeah, they're obviously doing a fantastic job down there.
I do know Mark. I've known him for a few years. Yeah, he's a real nice chap. Yeah, one of the good guys of a state agency.
Well, they're clearly doing something right.
Obviously, Goadsby's are a decent sized regional.
Yeah.
With regard to Parker Snell, they are part of Countrywide, if memory serves me well. Hearns, I believe, must be an independent. Winkworth are a franchise.
Yeah.
House and Son must be independent, as must be Slade's. Fox and Sons, I don't know if Fox and Sons, is that part of Connell's group? Is that the Fox? It is the Fox.
I mean, there is Fox and Sons is part of Connell's, whether it's this one or not, I'm not sure.
Good stuff. Good stuff. Well, we'll soon fight. We'll have to do some searching on that one. Let's get down to nitty gritties though. And again, let's look at the average price of a property that's come on to the market, because we're on new instructions here from the 1st of the 1st 21 to yesterday. It's 367. So we're going to look at the whole market, and then we're going to deep dive into the upper quartile, because we always like to see what the posh boys and girls are doing.
Yeah, absolutely. Particularly in that part of the world. Yeah.
Okay, good stuff. So let's look at Myers, and as I would expect, the number one agent is going to have an average listing price very similar to the average.
Yeah.
And as you can quite clearly see here, that the number of new instructions, or their market share. Hey, this is a new idea, Verona. Do you think estate agents should put a pie chart about how many listings they've got and how market share? They're brilliant. I tell you what.
You love a pie chart, don't you?
I love pie charts. Don't like estate agents.
Not a right move one.
Goadsby's,
at least.
Goadsby's. Again, number of new instructions. They're growing, as you can see there. Palmer Snell. It looks like they've been bumbling along around 5. They must have had a really good month that month. It might have been a new homes development and they threw it all on. You don't know. That's what normally happens. Okay. Hearns. Hold on a second. Alarm bells ringing. That again with average. So are Hearns the posh people with the silver
like
spoons? Nothing wrong with silver spoons. Other spoons are available.
Which would also account for more peaks and troughs in their shape of their trading.
Yes.
Rather than a more consistent flow. Yeah.
Okay, Winkies, they are slightly above the average. Slades, again, it looks like Slades are in the top end.
And again, more peaks and troughs.
Okay, House and Son, 317. Okay, MKs, 327. Godsouls, 480. So it looks like we got a three-way race. So I'll tell you what we'll do, because again, we know the posh people like that. So I think we'll go for the upper quartile. We'll go from 600 upwards. Okay, so let's have a look. Okay, here we go. And as we would expect, we've got Hearns in at number 1, and they looks like they're having a good crack of the whip on that one. And Slades, like we suggested. Okay, guys, looks like your market share is dropping there. Okay. Myers
still doing a fair amount in that space.
I would expect the big dominant agent to have that a slice of that cake. Goadsby's, Winkies, Godsouls, Mr. Green. Oh, he's from Southbourne. Nice lad. Nice lad. Yeah, like good agency, that one. Stephen Noble.
He slipped into the top 10 when you filter down to the higher price brackets, because he wasn't in the top 10 in total. So that's interesting. So obviously a specialist in that space.
And then let's just see if there's any real posh agents on the million pounders. And Hearns are the daddies and the mummies of this. Yeah, let's
up there.
Let's have a look. Okay, well, there's not much over 2 million in Bournemouth. So again, okay, fair goes. Yeah, we like that. Right, good. Okay, let's just have a quick look at sales. So again, so just let's just.
This is going to be interesting given the skew on a higher end.
Well, we've now put the price back now to all prices. Okay, so I'm just going to take a photograph so I know what I'm talking about, or pretend that I'm talking about. So that's that. So now I'm going to go to sale agreeds. So what is particularly interesting is this. Mayors over the last 2.5 years had 6.62% of resi listings, but their market share on sales is 7.08. That's higher. Goatsby's 5.22 on their listings and 5.38 on their sales. Palmer Snell. Well, Palmer Snell not even in there.
Interesting.
Okay, remember that because we've got another graph in there that's going to look at that. Hearns are 4.73 on their sales, okay, and they're at 4.92. But again, Hearns are posh agents, so remember the posher end properties have a lower propensity to sell.
Yeah.
Winkworth's 4.58 on sales and 3.98. So again, Winkworth look like they sell a higher proportion of their houses. We do have a graph for that in a second.
Yeah.
And again, we'll just have a quick look to see if there's anything. I'll shout these out. Slade's at 3.09, 3.2 on the lit sales. House and Son, 3% on the sales, 3.37. So again, they're slightly below the mark. Fox and Sons, 2.69 on listings, and looks like Fox and Sons are not there. Again, so it looks like they have a lower propensity to sell. MK Estates on listings, 2.53 and 2.6. So again, good news for MKs. Well done, guys. And Richard Godsoul has got 2.12 on listings and 2.49. Okay. Well, I tell you what, we do actually have a graph which dives into that a little bit better. Okay. So let's just have a look. There's a lot going on this screen, and some of it is you can't see the wood for the trees. So let's have a breakdown. So the number of properties that have come on the market in the last 12 months, so that's August 22 to August 23, is 15.32% higher than August 21 to August 22. So therefore, if you are below 15%, you are below the Bournemouth average, and if you're above, you're beating it. So MKs are beating it, Goatsby's are beating it, Myers are beating it, Earns are beating it. So it looks like what that's telling me, because we're only looking at the top 10 there, that the bigger agents in the last 12 months have sucked in more business off the baby.
More of the share. Yeah, definitely. I mean, that's pretty. Bearing in mind that Myers have the significant market share in total, and they're still growing by almost 30%. That's a real vote of confidence for them, for sure.
It is.
Yeah.
I believe they have an employed model and a self-employed model there. Right.
It's the future, Chris.
I've been told that by many people many times, and I'm an absolute massive fan for self-employed estate agency for the right people. 100%.
100% agree with you.
Okay, so 3.31% of properties that have come on the market in the last 12 months have come on the market with non-geographical estate agents. Because you are Yopa, which is one of the biggest online non-geographical estate agents in terms of that you have a physical presence. And we're not here to argue the difference between that.
Let's not go down that rabbit hole.
I have interviewed Verona on the sofa, so do type in Verona Frankish versus Watkin, and we've talked about this many times. So go down that rabbit hole on my YouTube channel. Interestingly, nationally, online estate agents have 5.53% of the market nationally. I'm a big fan of this graph here, and again, that just shows you graphically what's happened. So you can quite clearly see that Palmer Snell is the. So look, that's interesting. Look, Palmer Snell were the biggest estate agent, summer of 21 to summer of 22. Because look, they're out here. Can you see that? I know it goes back the other way. They were the biggest. So Palmer Snell have pulled back, and Hearns, Goatsby's, and Myers
have both grown.
Have all grown, which again is quite rare. This is week 33, and we don't often see that. So that's interesting. So I'd be interested to know what's happened at Palmer Snell with regard to staffing or budgets and things. And we'll just have a quick look at the smaller babies. So again, remember, the drift is 15%. So everything should be moving up 15% off to the right. The only ones that seem to be, as I said, going backwards, Palmer Snell, and let's just what is that, Mr. Green? Let's just have a, it's quite, here we go. What's Mr. Green done? He's grown by 26%. So well done there, Mr. Green from Southbourne. Right. Okay. We're not looking at new instructions. We're not looking at new instruction market share. We're not looking at sale agreed or sale agreed percentages. We're not looking at fallen throughs, and we're not looking at price changes. We will come back to those in a second. But, well, actually, let's go down that rabbit hole just a second. 45% of properties have been price changed in Bournemouth. That's quite high. That's normally around 30%.
Yeah. And therein lies the regional nuance. And perhaps some of this is about the volume, the blend of higher priced properties, and the fact that those higher priced properties are maybe more speculative and not necessarily bothered about the time frame. Let's have a look at what that tells us about the
right. Well, that's funny because that's a million. They're not being so it's not the lower stuff.
Not the higher end. There we go.
So again, you would have thought that, wouldn't you?
You would have, yeah.
So let's go look core market, which is 300 to 500.
I love it when the data challenges your assumptions. I love that.
46.
That's pretty normal, pretty average for the.
So it seems to be that lower to middle market.
Interesting.
That where the core of the price changes, which is really weird because normally what I'm finding when we've done other shows is it's the other way.
Yeah, that's really interesting.
Again, it'll be fascinating to see what the Bournemouth agents think of that. And again, that's the beauty of this data is that you can analyze it and have a look. Right, okay. 32% fall through rate, which again is higher than the national average. But again, we've done one in the south, it is slightly higher. Right, okay, this is really, really important. If there's one stat in here, which I'm very passionate about, is the exchange to withdrawn ratio. If you think about it, our job as estate agents is to sell houses, not put them on the market and for them to be withdrawn. So if you think about it, the only reason a property will leave an estate agent's books is she either exchanges or she withdraws. So therefore, this is why I'm a big, massive fan of this one, is this. Myers, for every 100 houses that they put onto the market, they will exchange contracts and get them moved on 68.13% of the occasion, whilst Palmer Snell, 50%. Now, if I was Myers, I would actually go and actually say if I was up against Palmer Snell, I would say this, Mrs. Miggins, if you put your house on the market, and take this out on the VAT, don't put this in the marketing because you've got to be very careful with your marketing on these stats.
You do, yeah.
Okay, but you can take any valuers watching this, get your bosses to have this bit of kit. I'm not being paid to say this, but this is independent information, and you can hover this. So if Myers were outside at a property and was saying, Mrs. Miggins, Palmer Snell, and this is nothing against Palmer Snell, whatever name was there, I would mention it. Mrs. Miggins, if you put your house on the market with Palmer Snell, you will have a 1 in 2 chance of moving home. With me, you will have a 7 out of 10 chance of moving.
Yeah.
Yeah, that's the cold heart. And look at the spread of that. Now, didn't we say earlier on Fox and Sons were in the top for listings, but not for sales?
We did.
Fox and Sons at 37%. You know, if I was Goatsby's independent 59, Hearns 60. Again, remembering take Hearns with a slight pinch of salt because we are at the posh end and therefore the numbers are going to be lower. So that's going to drag you guys down a bit nicely. Hope you don't mind me saying that. But so don't take that with a pinch of salt. But House and Son 67, Slade's 59, MK Estate 64, Fox and Sons we've already talked about, Corbyn and Co 59. I mean, there's a fair old spread there.
Big variance.
Look at that. I mean, there's a massive spread there. And I think it's important that you use this data to your advantage, because the simple fact is that there is documented proof that you've got a greater chance of selling your house.
I'm also wondering, given what you said about mayors and that they have an employed and a self-employed model, and I'm wondering what their fee structure is for their sellers and how much of a part that is playing in their strong exchange rate. and whether they have an upfront element to their fee, whether they have a marketing fee, because there's a lot of evidence to suggest an upfront marketing charge or fee to the customer brings them closer and makes them more motivated. And we see that in our model for sure. More motivated vendors when you have skin in the game from the get-go. So it could be an element of that that's playing into some of those higher exchange rates.
Absolutely fantastic. Anything else on there before we move on to the next?
Don't think so.
Okay. So this particular one, again, the devil is in the detail. It's like prospecting in Australia.
I love this graph.
I do like the gold mine, or the analogy. Here, there is absolute gold in here if you know what you're looking for, okay? So what the first graph thing is this. So we've done it in the order of new instructions from the top here. And what happens is that 20EA will give you an automated valuation model or Valpal figure. Other AVMs are available for each of the properties you put on the market, and then they will see what you put it on the market for. So therefore, Mayors, their average asking price above what 20EA think the house is worth before they put it on the market is 1.67% higher. Goadsby's at 1.16, Hearns at 3.46. Again, that number is going to be high because they deal with the posher end. So just take that with a slight pinch of salt. Palmer Snell at 3.6, Winkworth's 2.2. Okay. Then what price do you achieve from the original asking price versus what you actually get for the property? And Mayors get 1.8% less than the original asking price. Goadsby's 4% than the original asking price. Hearns 6.67% less than the asking price. As you go down that list, you will get a flavour of everyone's details, okay, and the numbers. But
so I'm really drawn, Chris, if you don't mind me sort of interrupting here, I'm really drawn to Lovett Estate and letting agents. So it's kind of halfway down that list. So their original listing price was closer or closest to the AVM value of most of the agents on that page, and their price achieved is also slightly higher compared to the listing price. So for me, that's the perfect blend. So you've listed at the right price and you've generated the optimal attraction to the property, and then you've overachieved on the asking price. And if you compare that with, I'm going to take Hearns just because it's the first one there, which is precisely the opposite of that. It looks like significantly overpricing versus the AVM. Now, you can argue all day about the value of the AVM, but we're comparing apples with apples here, right? So everybody's using the same AVM. So their price listed was significantly, 3.5% higher than what the AVM said their property was worth, and they achieved almost 7% less than that. So that's the worst of both worlds, in my opinion, and Lovett here have a really great blend based on this data, at least.
Let us now apply all that in pure pound notes, because again, there's lies, damn lies, and statistics. So what happens is this. As you can see, 20EA believe the average price of a property in Bournemouth is worth 400 of your English shekels, thousands of pounds.
Yeah.
So the bottom line is this, is that Mayors would sell the property based on the last 12 months for 402,309, whilst Goadsby's 388, Hearns 386. Again, they're dealing with posh ends, so again, you have to take with a slight pinch of salt with theirs. Palmer Snell at 397, Winkworth 383, House and Son 411. Well done, guys, on that one. And Slade at 401. So again, if I was Mayors and I was competing against Goadsby's, I could say that I get on average 12 or 13,000 pounds more. But then if I was, I don't know, someone like Lovett's, I would say, and I was up against Mayors, I'd say I get 7,000 pounds more.
Yep.
Yeah, and again, this is
that correlation with what I just said at Lovett's. Yeah. So they listed more accurately, they achieved greater, and the pounds and pence difference to the seller was £15,500. You know, that's really strong evidence to support the idea of listing as accurately as you can.
So again, this data is available on 20 EA Insights. Both Verona and myself, we are fanboys and fangirls of it, and you can get it for your own agency for that. And so each week we look at a different town or a city. Let's just wrap up slightly. We'll look at how quickly agents sell their houses. So interestingly, just pull this up. It looks like MK's and Myers sell their houses quickest in 40 days, whilst your House and Co and Goldsby's 65 days. So again, I was using this data on the doorstep. Mrs. Miggins, I will sell your house 2 weeks on average quicker, if that's more important. And again, you've got
that's more important. That's the key, right? That is the key. If that one is more important to you versus the price achieved.
There you go. But then you can have that graph opened up and have a look on this. Let's just have a look on how quick agents get their houses sold on the market. And look, Clark's estate agents on average of 128 days from new instruction all the way through to completion. Whilst House and Sons 211. That is a wide spread. They're really tight. They are.
Yeah.
As you can see, okay, if we take off Clark's and we take off House and Son, they are pretty tight around that 150 to 180 mark. The average in the UK is about 181 days total start to finish at the moment. Okay. Just have a
whole other debate, right? Because that's just not, it's not cool. That's not acceptable. But let's not go down that rabbit hole today.
So lettings, and as you would expect, Open Rent are number one. They are an independent. They're not independent. They are an online estate agency that private landlords, and you can quite clearly see that. That's really interesting. Is that look how much their Open Rent are growing in Bournemouth. Okay, let's look at Enfields. Again, those spikes are for students. Looking at the months, I'm pretty much guessing on that one. And looks
there's
like
a number of dynamics in Bournemouth, isn't there, that impacts the share of the different models.
Yes. So Enfields is, Enfields, you've got those two spikes. Look at leaders. They don't look like they've got much of a student market.
Yeah.
Okay. Goldsby's, again, not particularly big student market. Looks like House and Son have a student market. I'm guessing there. McConnell's, students. Roberts, students. Frost and Co. Now again, Bournemouth is head office for Martin Co. So you would expect them.
Yeah.
Okay. Yeah. I would kind of hope a bit more market share from there, but
I would have done.
Okay. And Slade's, there we go. So you can quite clearly see. I mean, this is interesting. The average rent. So let's just do Jan to June, so we don't mess about with student, because that really does cop the figures up.
Yeah.
Okay, let's just have a quick look there. So the average rent in Bournemouth from Jan 1st to Jan to 1st of July, 989. And let's have a look at what it is that's been this year. Okay, it's nearest done it. 1,187.
Yeah, not surprisingly, very similar to the national increases.
Okay, so there you go. We'll finish it with that. Bricks and Logic. Do go and check them out. It's a great bit of kit. Final thoughts, Verona, before we go.
I guess my final thoughts are that we covered quite a bit of this. The listings seem to continue to be robust. We are seeing a decline in both the rate and the time frame to SSTC and also completion. And that's going to prove challenging, I think, in the final quarter of the year. So we as estate agents have got to do, and I talk about this very personally as well, we've got to do everything we can to protect our pipeline, to have honest conversations with our customers about pricing it accurately from the get-go, but then also continuing to have ongoing conversations where we can't get that right, to ensure that they are priced as best we can to sell in order for us to get the outcomes that our customers need. The market dynamics this year are significantly different, but I think now we're 6 months in, and I hope that we are opening our minds and learning a lot more about how those dynamics are affecting our businesses, and that we are applying everything that we're learning, because we're all learning every single day. We're learning new things and new nuances to elements of our business. So yeah, I think we just need to be open-minded and honest with ourselves and with each other.
Verona, exceptional as always. You've passed your audition with flying colours.
Oh, I'm so relieved.
If you would like to come back another time, we would love to have you back on the show. You've been a breath of fresh air.
Let's do it in a few months when we can review how the year has panned out a bit more, and then we can reflect on our predictions.
Indeed, we'll get you back in a few months' time if that's all right with you.
Great. Thanks for having me, Chris.
Thank you. But more importantly, thank you, the viewer, for watching this. We have a long list of towns that we've got on, but if you want to add your town to it, we can add it and see if we can have a look at that. Please do check out Bricks and Logic. Please do check out 20EA Insights for that platform as well. As I said, no payment or consideration has been made. It's just that I'm a bit of a fanboy of both of them and really shouting at it from the cloud tops. Well done to all the Bournemouth estate agents and estate letting agents who've seen it, and there's some great stats in there, and there's some other stats that show that you could probably improve. I hope you take it.
I learned a lot about Bournemouth today. Definitely, it was great, really good little tour.
Indeed. But thank you for watching, and we look forward to seeing you next week on week 34 of the Stat Show. Thanks very much.
Bye.